What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 19th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about a major impending correction over the next couple of weeks that is likely to play out as price continues to weaken both in Bitcoin and a whole range of altcoins. There's been a bloodbath over the last 7 days, and I want to spend some time to talk about why that could probably continue over the next few weeks after the past few months of strength that we've had in crypto markets, and I'll also be talking about where I'll be buying. We've got a lot of things to talk about in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here, guys, by taking a look here at Bitcoin. We are hanging not only well below the 21-day, which was our prior range of support here, but as we've warned about for the past couple of weeks, going into the ETF announcement that there could be a correction of some sort, we are now not only below the 21-day, but along with that, just barely trading alongside that support band for the Lux Algo indicator, one of the few other indicators we like to utilize here on this channel. And if that snaps, as you can see throughout history, it has tended to be that at a minimum for a couple of weeks here, even during a continuation of optimism going into the next couple of months, we would expect that we're at least going to have a good week or two of downside, and this could really set us up towards Bitcoin coming down towards some of those long-term moving averages. I'm talking moving averages like the 100-day pocket or the 200-day pocket, and right now those are sitting roughly around under 40K, and between the 200-day pocket anywhere from around 35,000 to 33,000. Now, these moving averages will likely be rising a little bit, so I'm not saying price needs to go all the way down there before buyers start to show up, but I am expecting that we are going to get somewhere within this ballpark here, and that means we're going to be generally seeing another 15-20% correction in Bitcoin's price, depending on which moving average you're going for. Something more conservative, a more 6-7% correction, somewhere in the middle would be around a 10-11% correction, and as I mentioned earlier, around a 15-20% correction for that 200-day moving average. So that's for Bitcoin, but I want to talk a little bit before we dive into altcoins. We're going to cover a whole range of different cryptos that we're looking to buy on the dip with some of the trends and narratives that we've been excited about, but I want to try to explain why this might be happening. I think a lot of people are wondering, Nick, I thought the ETF was a breakthrough day for Bitcoin, that there was a lot of inflows, there was a lot of trade volume, a lot of people excited, and for sure, it wasn't a terrible launch, but I have to tell you guys, day one is not everything. We need to track how the actual inflows go. And if you missed my last video, I talked about how trade volume does not matter. You could have, again, for example, an ETF that holds $1 billion of a given stock or asset or commodity, and it could have $100 billion of trade volume. It doesn't really matter, right? Volume is just basically exchanging hands from one trader to another. And we need to focus more importantly on inflows. We need to ask how much assets under management are we seeing in these new ETF products? And more specifically, how much Bitcoin is being stored in these broader financial exchange traded products, including GBTC. There's an interesting story here. Unless you're watching things from a bird's eye view and looking at all the other different ETP products and tracking the actual numbers of Bitcoin, spot Bitcoin being stored, you won't get a clear picture. Let me show you what's happened here over the past few weeks. So we started back here on the 10th, really over the last week of trading information since these ETP products launched. So we generally had around 621,844 Bitcoin stored in all of the ETFs. This includes GBTC. What we see over time is definitely an upward trend. There's nothing negative here. We're not seeing a massive outflow. But one of the big nuances that people are missing if they're just tracking the headlines is they're seeing that now the IBIT ETF, which is the iShares or BlackRock ETF, now holds 20,000 Bitcoin, and the Bitwise ETF owns this much, and yada, yada, yada. You'll hear all these different headlines. The Fidelity ETF owns 20,000 Bitcoin. However, what many people are negating is the fact that a lot of that Bitcoin is now starting to flow out of GBTC, and it's not a negligible number. A lot of that increase we are seeing within the total amount of Bitcoin and these new ETF products is coming out of GBTC. Since the 12th, we have seen a net outflow of more than 24,000 Bitcoin from GBTC. So what we're really seeing here is not some massive surge of new capital coming in. We are seeing some money come in, for sure. It's not something I'm trying to doubt here, but we're not seeing as much inflows as people probably expected. What we are seeing, though, is essentially all the other ETFs, which charge much lower maintenance fees, taking GBTC out for lunch. They're taking away their customer base. They're eating away at some of their market share and their dominance against these other players. And that's to be expected here, because for a lot of people, I would much rather pay 0.25 to 0.2% versus paying 1.5%, which is the annual maintenance fee for the GBTC product. So essentially, each year, that cost is being baked in to the underlying spot assets that are managed within that ETP product. It's an exchange traded note, but that's going to be converting to an ETF soon. Anyways, putting aside all of the complexity here, the important thing to understand is that what we've really only seen since the launch of these ETFs is a net increase of 31,000 Bitcoin. And that's definitely a sizable amount of Bitcoin, but when you compare how much was already stored in GBTC from the get-go, over 619,000 Bitcoin, and along with that as well, when you consider how much MicroStrategy and individuals like Michael Saylor already own, this is pretty weak considering that this was supposed to be some major flagship product. Nonetheless, I definitely think it's good to see the ETF live. If you guys have missed my previous videos on this, just know that I'm a big fan that the ETF is finally here. However, we need to answer the question whether or not this is really a big deal. That's what we've been talking about for the past year. As much as there might be an ETF coming, is it enough to counteract the forced sell side pressure as prices have risen higher from people who have ridden the wave over the last year? It's a question of whether or not there's going to be more demand versus the entrance of new supply into the market. And I think the latter is going to weigh out here. I think there's more supply right now than there is really demand at these prices. And institutions may know this. They may be waiting for that dip opportunity, which is why we're not calling for absolute new lows, but at the same time, we're calling for what I think is very much a needed and healthy correction. It's not too bearish, not too negative. If you're just looking at my titles and thumbnails, you might think that I think the world is ending here, right? At the end of the day, I'm just talking about what I believe is happening within price. And I think it's very reasonable here, if we look at the charts, that essentially speaking, as we talked about for the past couple weeks, this is what's playing out. Now, I want to go ahead and spend a little bit of time here to talk about the altcoin market, because I think altcoins are also showing some worrying signs. We are well extended away from the weekly support band on Lux Algo, as well as the moving averages. The 21-day has continued to maintain as a means of resistance here rather than prior support. We can see that the daily time frame Lux Algo has flipped to the resistance band. We got shot down exactly there on January 11th, and we've been trending right back below the 21-day ever since. And you've got all these great long-term moving averages here hovering around the $400 billion range. It's an $80 billion pullback in market valuations for altcoins, somewhere a little under a 25% correction, more around a 20-25% pullback. And I think this is totally doable here, guys. This is not some kind of pie in the sky request that we're going to see some kind of correction here between these ranges. And while it's quite a relative spread here, I would say at a minimum you need to get down to that 100-day. Now, for those of you who are wondering, and we'll dive through individual altcoin plays, but if you're wondering about that question of where I'm going to be buying, where do I see value in these plays? I'm going to be watching how price reacts at each of these moving averages. If I see, for example, that we come to the 100-day, I don't think we're going to just bounce right out of it. I think you're going to see some kind of chop here around that range. And if we aren't really seeing it hold very well, we don't see some kind of acceleration off of that moving average quite quickly, then I'm expecting this is coming down to the 200-day pocket. And it wouldn't be too crazy. The 200-day pocket is rising here, and it will likely be, by the time this is pulling back, somewhere in the range of 420 to 400 billion. That's where we consolidated here. This was prior resistance for a long period of time, and it would be beautiful to make that support. That would actually probably be one of the most long-term bullish things that could happen here for altcoins. Having a healthy correction, typical, again, long-term expansion correction that you would tend to see. And with that, being able to build a new foundation of support on prior resistance, proving that, hey, we might have been bearish, others might have been bearish, but it's time to get on the train. This is going higher, right? I'm not saying that that's what's happening, but if price shows us that, that could very well be the case. And as much as we were betting that there was going to be further lows for the most part of 2023 and the earlier part of the first two quarters, at the same time, we are here to admit when we get things right and when we get things wrong. I think overall, though, we are leaning on the right side of the trade now. The price action is just telling it. It's screaming it right now. It's overexhausted. And above anything, that you shouldn't really be FOMOing at these prices. Let's take a look at some of the plays that we're interested in and where we might consider buying them. Stacks is one of the big plays that I'm keeping an eye on here. Stacks is one of the programmable layers that's been built around Bitcoin. And essentially speaking, this is allowing for smart contracts and all types of different DeFi related applications to be built. I think DeFi and general programmability on Bitcoin is huge. Any Bitcoin infrastructure is big going into 2024, as Bitcoin is kind of seen as this leading asset. It's the topic, even post ETF with the coming halving event. I think overall that seeing Stacks come down here towards its prior support range that we saw in February 2022 and what has now been serving as resistance in 2023, around basically $1.20 to $1. That's a value range that I think is quite interesting. The moving averages are going to start to kind of rise into that range. Our Lux Algo weekly support band coming in there to potentially provide support as it did last time. This is the kind of range that I look to find some interest on this, because that's going to be roughly anywhere from around 40 to 50% pullback for Stacks from its prior highs at $2. That's the kind of range that I would look for some excitement from buyers potentially coming in. And I think it at least gives us a good risk reward setup. I'm not here to say that it couldn't go lower, but what you can do is when you wait for these pullbacks on strong players, when you get nice, healthy 40-50% corrections, which you can get in altcoin markets because you get moves that are 300, 400, 500% in just a couple of weeks, what you can get with this is essentially an opportunity to buy a strong market leader at a discount, but it's still showcasing the signaled strength that it's ready to continue charging higher and really just rally onwards here. I think this one could really start to move once it gets past this range here, once it gets into uncharted territory, similar to a lot of plays that have these long bases and really are just waiting for their moment. They're waiting for that catalyst to that narrative. And I think, again, if there's a time for something like Stacks to take off, it would be going into the halving event. It would be hopefully with continued optimism around the ETF. Along with that as well, there's ordinals, right? Again, another Bitcoin-related technology. This is, again, just one of the many ordinal collections. There's no real way to directly invest in ordinals as a technology, so I don't want to be misleading there, but ORDI is one of the biggest collections here, and we can see that this is corrected from $91 down here towards $69. As we've emphasized for the past few weeks, the trend is slowing down. We're practically neutral for over a month and a half here. And we're now trending below the 21-day. We're well extended, not only above the daily range of support, which is down here at $46 to $55 on the Lux Algo indicator, but we can see the moving averages here, well far and extended from price. So the 100-day would put us somewhere here roughly in the low $40 range. The 200-day moving average pocket could take us all the way to $25. And seeing as this is a purely speculative play, guys, unlike Stacks, which at least has a real network with real applications and use cases for utilizing BTC, I would say to be cautious here. I would say be a bit conservative and wait for this to have a significant pullback here. Wait for this to actually come back in to some of these lower moving averages, even though they're far and extended. They'll continue to rise here, but I think at a minimum, coming from this $91 range, you're going to get a 45-50% pullback easily on this, if not a little bit worse, coming down into that 200-day pocket. So just wanted to let you guys know those are some plays that we are looking for here. Unfortunately, it's difficult to get access to ORDI if you are in the US. Stacks is a more liquid and available trade to go after here. But I think for both of them, we've got a ways to go here. Meme coins as well. I know a lot of people were FOMOing in off the move here from BONK the other day. We again signaled caution here, as not only it didn't get above the Lux Algo resistance band, but beyond that, we just couldn't even hold on the 21-day after a slight move here. I know it sounds like a lot of like 3 consecutive double-digit moves, but for BONK, this is small stuff. This is a cakewalk. And now, unfortunately, because the market got ahead of itself trying to buy the dip before the moving averages, there wasn't enough steam and prices are cooling down. And I think not only is there a chance for this to come down into the 100-day pocket, but I think this could very well come down into the 200 week as well. Excuse me, the 200-day pocket here, right? And this again puts us near where one of our bases was before. Usually you tend to find in a lot of these kind of altcoin moves here that when you make significant moves, you get even more significant corrections. And what you tend to find is that when you have these kind of rallies where you have a definitive move, a consolidation period where things just go sideways, get closer to those kind of bull market support ranges like the 21-day, and then you continue to shoot higher for their kind of blow-off finish here for at least that extension in price, you tend to find that all those gains in the secondary wave get pulled down and corrected. So we're calling for just an 80% correction. This could come down, though, if you want to think about it that way, around 85 to 86%. So that's, again, not a price range I'd be willing to wait around for if I feel that price is starting to show some confidence here. And again, the confidence is shown when price stops declining, right, and starts to consolidate and build a base somewhere. And there you can at least have a much better risk reward setup. You can set a nice, well-established stop loss of 20-25% to give it some wiggle room to be able to go down a little bit more before it might extend higher. But if so long as you have a good risk reward setup here, I know losing 20-25% sounds like a lot, but you're not putting all your capital in it. Ideally, I wouldn't be doing that. But outside of that as well, if you have a 20 to 25% stop loss and you have a projected return of a couple hundred percentage points or 1,000 percentage points, your risk reward is incredibly favorable. And you want to make sure you have those established take profits. You don't want to try to get the absolute top, or at least you have your signs on shorter time frames for when that trend is starting to weaken, like the 4-hour. If you're starting to break below that trend on the Lux Algo, that could be your worrying sign to start taking some profits. So again, I think there's going to be a lot of great plays here, but they're just going to have to be at a bigger discount. Solana as well. I remember I saw this like kind of euphoria posting on Twitter where people are like, oh man, to get Solana at $80 again would be a godsend. Guys, Solana fundamentally has nothing new going for it. Okay? And along with that as well, beyond the weak fundamentals outside of meme coin speculation, Solana itself is facing resistance at its 21-day. I don't mean to debate so much on the fundamentals. I know some people like Solana. I'm not here to insult your positions or anything. And to be honest, I've made wrong calls in the past. Solana did great in 2023. Nonetheless, a lot of the things that Solana had going for it from October to December are not playing in its favor anymore. It is barely holding here in the Lux Algo support band. It is chopping between there and the 21-day for the past few weeks. And those moving averages are not too far away, but they still would account for a 50% plus correction if we go down to the 200-day moving average. Right? If we go down to this pocket here, well beyond a 50% correction, and it's where we had prior support here, it's where we bounced off the 21-day. Wouldn't be too surprised if you get a correction somewhere in that ballpark. It doesn't mean you need to wait around for that. But what I'd recommend here, guys, is if you want to, for example, another approach you can take is, for example, having like segmented additions or averages into a trade. So you could build, for example, an initial position here in the 100-day pocket with, say, 50% of your capital. And if you get the opportunity for it to come down to the 200-day and you think that there's going to be a balance, you start seeing it hold out well, then you can average in and you have a lower estimated entry. But the big thing above all, guys, is that I don't think Solana really has as strong of a narrative as people claim it to be. I think overall right now, Bitcoin is the focus here, and investing in Bitcoin related infrastructure, especially considering the market cap of plays like Stacks or Ordinals versus Solana, which is now a multi-$10 billion altcoin, I'd much rather go with Stacks, which is I think sitting roughly around 1.5 billion at the time of recording. So I think things like that are going to put you in a much better position than trying to trade these trends that have not only not really strong narratives, but outside of this, well, they have market cap. So sorry, Stacks is around 2 billion right now. But again, at the entry we're talking about here, it'd be somewhere probably in that ballpark of 1 to 1.5 billion. I would much rather work with that than trying to buy into Solana, which is sitting at a 40.1, almost coming up on $41 billion market cap here. You're just working with much more favorable numbers, favorable markets of scale versus these plays, and I think a much stronger narrative. But again, to each their own. I know everyone has different perspectives on it. One thing I wanted to let you guys know about is you guys have probably noticed on the charts, we like to use a combination of the moving averages. We have our own exclusive momentum indicator we also utilize for the dashboard members. But outside of this, well, you guys probably have seen that we utilize the Lux Algo support band here on the daily time frame. It's been very consistent at spotting the majority of overall trends and also letting us know when they're starting to flop and start potentially pulling back. So if you guys want to access Lux Algo, I have a link down below in the description. We're using the signals and overlay indicator on this channel. But there's a whole range of indicators you guys will get access to, and you guys can get access to Lux Algo for a monthly, quarterly, or annual subscription, 30-day risk-free guarantee. You can try it out. If you don't like it, then you don't have to continue signing up for it and stuff. You can cancel it, get your money back. But I think overall, Lux Algo is definitely a very powerful tool that you guys should consider using. There's a reason we use it here on the channel, because I think overall we can see not only that it gives us some great entries historically speaking, it's basically time the absolute bottom here on the bottom part of the band here for stacks on the weekly time frame. I recommend using Lux Algo on the daily time frame or above at a minimum, preferably on the weekly and daily time frame for when it comes to crypto. And when it comes to stocks, find those long-term capitulation entries or long-term trend reversals. I like the weekly and monthly time frame. So anyways, just thought I'd let you guys know. You guys can check out the link down below in the description. There's another play as well that I got asked by a lot of people to cover, and that's RUNE. I know this has been a potential Bitcoin narrative play that a lot of people are excited about. Well, as you can see here, since back in December, this thing has just been continuing to fade here. It was well overextended. It climbed from 80 cents up to around $7. This thing again got shot down at its long-term resistance band here, and it looks like it's coming back into the Lux Algo support pocket. We'll see if we can do that as it's coming down towards the 200-day. This might be a play to also watch here as well for a longer-term rally towards its prior highs back in May of 2021 if the Bitcoin narrative continues to play out strong here. Again, RUNE fundamentally, I know it has some pretty exciting technology for those who have been big fans of the protocol. Overall, I care more about price, right? I care about what price is telling me here. I know it might be related to the narrative, but I want to see this one outpacing all those other plays. There's one last thing I want to talk to you guys about here, which is like how you can determine which altcoins you start to show interest in and which ones you're actually going to start trading and investing in. A big thing that I would emphasize, so many people like to just buy the plays that are at the biggest discount, right? What I actually like to do is I like to find plays, for sure, market leaders that have done well. I like to get them at a discount, no doubt about that. I don't want to buy when everyone's FOMOing in and it's absolutely at new all-time highs. But there's a really important thing that I would recommend that you guys flip in your perspective, and that is that you want to buy strength. You want to buy plays that are doing well versus the competition. So I'll give an example of how you can measure this here. Let's say, for example, we wanted to compare whether or not we wanted to buy stacks or RUNE, right? So let's go ahead, do a little comparison here. We can divide stacks here versus RUNE. Go ahead, we've got the history there. We're gonna go ahead and divide the two. And what do you know here? You've got a really interesting ratio that can actually show us when it's more favorable to be in one play or the other. Now, again, there's a couple different ways you can look at ratios. One of the things we tend to do over longer term periods of time is we like to see whether or not it's at a broader discount or, for example, if it's overextended versus the other play. We can see here that stacks has been, generally speaking, during this period of time, a much more favorable play from November to January of 2024. Previously, from June of 2023 to November of 2023, stacks was well underperforming what RUNE was doing. And we can see here that while it's facing some resistance in the near term at the Lux Algo support band, if it continues to hold in that 21-day and 200-day and continues pushing through, this might have some more room to go versus the performance of RUNE as a play within the crypto market. So again, the main point here I just want to say is that when you can do these ratios, you can start to see that similar to here in November or here in March at a very similar range, buyers favored stacks, and stacks outperformed here massively against RUNE's performance for these past few weeks. And it may very well continue to do so as it hasn't gotten up here towards some of the prior highs that we've seen in the past. There's no guarantee that it has to go up there, but again, ratios can at least help you to determine, have we seen in history, has this play gone further here? And outside of that, beyond it, the most important thing is just how is it performing here, right? Is it holding on the moving averages versus this play? Cool. In that case, I'm going to probably favor stacks. The performance of stacks is outpacing RUNE here in the near term. And so long as that continues to hold up and it's not snapping through these support bands or moving averages, I'm going to favor STX here. So this is kind of a very simplified way to filter a lot of the noise. When you have so many different cryptocurrencies, so many different plays in the market, you're like, which ones do I go long on? Well, build custom ratios. This is one of the most powerful tools that I know 98% of traders do not use in this sector. It's one of the big benefits for those who have been watching this channel for a long time. We focused on this topic of ratios. And I really wanted to share this with you guys because it's so powerful here to know when to cycle from one play to another beyond just analyzing price. So this is some very impactful stuff here. So anyways, guys, I just want to kind of, in closing and summary here, talk again about where we stand here on altcoins and the broader crypto market. It looks like we're still heading in to another few weeks here where we're going to be facing some chop, some downward price action off of relatively weak results so far from the Bitcoin ETF. We really only have a net inflow of around 31,000 Bitcoin. Don't let the headlines deceive you. There's a lot of rotation from GBTC. And while I think this is not a terrible result, it's much lower than I think what many market participants were expecting for new inflows into this space. A total net increase here of less than basically $1.5 billion. So again, we need to consider that this is, again, minute in the grand scheme of things. And we're going to need to see the momentum we saw out the gate for the first week continue if we really want this to be a big deal for Bitcoin going forward. So that's it for today's video, guys. I rambled on a pretty decent amount here. I hope we gave some good plays here and some good insights for what you can watch for and where you can look for those entries. If you guys did enjoy this video, not only consider dropping a like and sharing it with a family or friend member who may be in a similar kind of mindset of where things are going here and if they're concerned about the market. And outside of that as well, if you guys are interested, again, you can always check out Lux Algo down below in the description. It is a great way to support the channel. But guys, it's been a crazy week. It's awesome to see the Bitcoin ETFs live, and it's going to be a really interesting period of time for crypto markets going to the rest of Q1, as a lot of people anticipate in early Q2 the upcoming halving event. We're going to continue to cover it here on this channel through good times and bad. I hope this video above all proved valuable for you guys, and I'll see you guys on Monday at 6 a.m. Eastern Standard Time. Take care, everyone, and I'll see you guys in the next video.